Good morning, fam. How y'all doing? Sean, of course, want to do a real quick video to share with you guys a potential opportunity that's coming up in the market for a huge amount of pips on the Euro USD. So I'm going to just go through quickly a quick breakdown of the analysis that I did. Hopefully, you guys can follow along, and we can do a Zoom session or something later on if you want to ask questions about it in more detail. But essentially, Euro USD is kind of really setting up for a really great short opportunity for over 1,000 pips to the south side. A lot of opportunity there, but you have to watch it. It's kind of it's been going up literally for the past few months. It's kind of exhausting itself. It's about to hit some major resistance level, or what we call U-turn levels, where the market is bound to turn around. And once it does, the history has shown where it likes to go to, which is, about 1,000 pips or so, or more, up to 1,500 pips to the south after it exhausts itself. So I want to put this on your radar so that you guys can be looking at it and take advantage of the trade when it presents itself. So the first thing you typically do is you want to look at the monthly time frame. The monthly time frame will show you, will kind of give you the direction of highest probability. So it'll show you where does the currency pair want to go. And typically you want to trade in the direction of the monthly, right? So even on the lower time frames, if it's showing like you have a really great buy opportunity, but on the monthly, it's saying, hey, it's exhausted. We're looking, the currency pair is bound to go down. You typically don't want to trade against what the higher time frames are saying, because the higher time frames always push the lower time frames. So with that being said, you can see on the monthly, went up for several years. And over the last couple of years, it's actually been kind of meandering downwards. If you look at the Fibonacci's, these are similar to Elliott waves that they teach in IML, but ABCs are slightly different. But essentially, all this is saying is, over the last few months, when you establish this pattern, the ABC pattern, you find the A, it goes on to the B, it'll come up, find the C. And that'll tell you exactly, once you know where the C is, it'll tell you exactly where the currency pair is going. That's a very high percentage of going over the course of time. So what this pattern is basically saying, without explaining A, B, C patterns, is that the market wants to come down here to what it calls this D extension. So it's usually A, B, a C, and then the market always goes to the D, say 90% of the time, right? So the market wants to come to this lower black line level here. As you can see, it's been meandering down, and over the last several months here, I don't know, this maybe a year or so, it's been kind of in a tight range. But even so, as you come into this tight range, you can see it hit the bottom, it went up, it found resistance right on this top level, it come back down aggressively, it'll hit the bottom, it finds support, bounce back up to the top. It's done this 1, 2, 3, 4, 5, 6 times here on a monthly, and right now, where is it? It's in the zone, the reversal zone at the top of the monthly. So what this is telling us is that at some point here, the market probably wants to turn around and reverse and come back down to this lower level. And as you can see, each time it's come down, it's been hitting lower and lower and lower. So this time around, it may actually come all the way down and hit the D extension. That is a kind of a magnetic force is pulling it towards it. Over the last, several cycles here. So direction of, all I have to say, direction of highest probability from what I'm seeing here is down. The market is going to turn at some point and come back down. The only risk is sometimes when you break an inner trend line, the market tends to want to go all the way to the outer trend line. But typically it'll break it, come back and test that trend line. So it could come back and test this first before it goes back up and hits the outer trend line here. So still, with all that being said, direction of highest probability right now is going to be imminently down. You don't want to buy this. You want to wait for it to exhaust itself, and then you want to start selling, because this is where the opportunity is. And there are right now, if I come from this point down, even to this first level, you have 972 pips. It comes all the way down to the D. We're expecting it to, you have, again, 1,500 pips to the south, right? So that's a monthly. Next, you want to look at typically the daily. So the monthly will give you the direction of daily. You look at to find out if you're at a high or low price. So you make money in Forex by buying low and then selling high, or selling high and then buying, getting out low, right? So we know the direction of highest probability is bearish, meaning you want to sell. So right now you want to make sure you sell at a high price so you can maximize your profits. So if you look at the daily, you want to see, are you at a high price or not, right? So here again we see that bracket that's kind of kept the market in check. The market's been moving in. You can see it actually broke through the high level of that range it's been in. So the next question was, why would it do something like that? Well, if you add Fibonacci's to it, the major Fibonacci again is still saying it's going down, but they're sub swings. So even when the market moves up, it'll move up in Fibonacci sequences. So as you can see here, you have an A, you have a B. The market has come back down, and now it's moving towards a C. This is where ultimately right now we're expecting the market to go to. So this is also like a magnetic force that's pulling the market up higher before it starts to fall and go down to the lower levels where we expect it to. So the market broke through this strong level of resistance. You can see it hit it 1, 2, 3, about 4 or 5 times before it actually broke through. And what we're anticipating is the market can go probably as high as this level here, potentially. That's about another 100 pips or so away. But it could turn also before it gets there, because one of the things the market does, if it goes from A to B, usually it wants to come down to hit at least this level as a C before going up to the D. When it falls short of that, a lot of times it'll come up. It'll find resistance somewhere in this level between this blue line and this red line, and it'll turn back around, come down and find hit this 382 level, and then go up and hit the red line. So really all that to say that the market can either, it's a 20% chance it'll go all the way and hit this first before turning around. But if it does turn, we know it'll come at least to this 382 level. So you want to look for the market to start turning, and if it does, you want to trade it down to at least this level, which is about a 600 pip opportunity anyway. And then you want to watch it closely to see if it wants to rebound up and hit this high level before coming all the way down where we expect it to. So right now, it's really in a watch mode from the daily. We are at a high price. The market, as you can see, has been moving up. It's exhausted. It's broken through levels of resistance that it's had there, and it's still kind of pushing hard to the north. So it may go all the way and hit this level. If it doesn't, you'll see it start to turn, and if it starts to turn, you want to look for a selling opportunity down to at least this 382, and then you want to be sure to watch it around here to see if it wants to keep going or if it'll turn back to hit this level before dropping. Hopefully that makes sense and I'm not rambling. Again, you guys can ask me questions later on if you want to get more clarification on this, right? So last but not least, when you find out if you're at a high price, and yes, we are at a high price. Yes, we're looking for an entry. We know there's about 100 or so pips, of 120 or so pips potential. It might bust through here and then turn around. But you want to start looking for the market to start giving signs of weakness and start turning. But you kind of gauge your entry as you go down to the hourly chart, which we have here. 1 hour Euro USD. Wow. And as you can see on the 1 hour, we also have a sub Fibonacci swing going up, and that extension is actually a lot closer. So we had it. Remember I said when you have an AB, it usually wants to come down and hit at least this 382 level. As you can see on the hourly swings, it went from an A to a B. It came down, hit the 382, actually passed it, came all the way down to the 50% level, and then now we expect this market to hit the D extension here, which is only 12 or 13 pips away. Usually after it hits the D extension, the market will tend to turn. So that might be why the market is driving up. It wants to come up, it wants to hit this before turning. So I would expect this market to come up this additional 12 or 13 pips and then start to make some kind of retracement, at least on the hourly level. We'll see if that translates to the daily as well. So on the daily, if you go back, hold on, what we may see is this market go up again. It usually wants to fulfill its 382 before hitting the red line there. So it might come up, as we know on the hourly, you have about 12 or 13 more pips. You might see it come up here and then start to U-turn before it hits that level. Or again, it could very well go straight and hit that level. So basically what you want to look for is you want to look for the market turning. You want to look for the market to start turning, and you'll start seeing that on the hourly level. If it starts to turn, we have first target about 500 or so pips to the south for it to go down to a 382, and then beyond that, if it continues to fall, we have about a 1200 to 1500 pip opportunity on the south. And what you want to do as the market moves in waves, I'll give you an example. If you're trading it to the down, you'll trade it, and then when it starts to U-turn, you'll get out. When it hits a high price and starts to turn down again, you'll get in again. When it starts to U-turn and come back up, you'll get out. So you'll continue to trade in that fashion, not just buy and hold, but watch the waves, buy high and sell. Sell high and get out low. Sell high, get out low. As it goes all the way down the next 1500 pips. If you do that, you probably end up making about 3,000 or more pips on that move. All right. Hopefully that was clear as mud. If you guys have any questions, feel free to reach out. But the big takeaway is EUR USD is about to fall. It's imminent for it to fall and give you at least a 500 pip opportunity to the south. It'll either go up another 12 or 13 pips or so and then start to drop, or it can go up at least another 100 pips based on the daily and then before it drops. But you definitely want to keep an eye on it and look for that short opportunity, because it'll put a lot of pips in your bank. That's it, guys. Love you all. Take care. God bless. Peace.